This is Lupa Reese. Today I wanted to share some information in particular to the CARES Act and your mortgage loan, and a little bit more information on the forbearance part of it. I've been hearing a lot of people that are interested in getting more information, some other ones who have already have applied for it. Basically, the CARES Act incorporated a mortgage relief that's part of a $2 trillion stimulus package. In order for you to apply for forbearance, you need to contact your servicer. It's for residential property up to 4 units. It is an honor system, so basically you would just call them up and let them know that you lost your job or that your hours got cut because of COVID-19. Now, something that you do need to keep in mind, however, is that when you do your repayment, they might ask you for documentation. So just keep in mind that even though they might not ask you right now, eventually they might. If you are able to make your payment, please continue to make the payment. This is money that is that you're gonna have to pay back regardless. So it's not gonna be forgiven. So it's better that if you're able to make it, go ahead and make it. Basically, the mortgage payment relief portion of it is you'll ask for forbearance for 30 days, then it can go up to 180 days, and then you can request an additional 180 days if you need to. This is for federally backed mortgages. That's Fannie Mae, Freddie Mac, FHA, HUD, VA, USDA loans. These payments, like I mentioned before, are not forgiven. You're gonna have to pay them back. But the good thing about it is that you're not gonna be incurring any fees or any penalties or any interest. If you don't know who your servicer, the type of mortgage that you have, you can contact your servicer and they'll provide you with that information. Now, you must contact your servicer to apply. You can't just stop making the payment because they're just going to assume that you're just not paying, and they're not going to have documentation as to why. If you have a loan that is not a federally backed mortgage, then you can still contact your lender and ask if they're providing any sort of mortgage relief. Most of them are right now, so they're working with you. So what happens after the forbearance period? And this is why it's important that if you're able to make the payment, you continue to make it. You're still going to have to pay for those backed up payments. And what's going to happen is, more likely, unless you negotiated something, you're going to have a balloon payment. And that means that you're going to have to pay the 3, 6, or however number of months that you didn't pay your mortgage. You're going to have to pay that at once, plus whatever is due that month. And most people, if you applied for the forbearance, it's because you didn't have the money. Most people won't have the money. So you need to work something out. And so that you don't have to go through this. When you apply for your forbearance, or when you're talking to the servicer about the repayment plan, negotiate for the payments to go towards the end of the life of the loan. That's going to be very important, so that you don't have to worry about this when you reinstall your payments again. Yeah, it's going to be adding more time to your loan, but you're not going to have a balloon payment at the end of the forbearance period. Okay. So what are some questions that they're going to ask you when you call? It depends on the servicer, but some questions might be, how come you can't make your payments? Is this temporary or is it permanent? They're going to ask you questions about your income, expenses, how much money you have in the bank, things like that, to make sure they even though it's an honor system, they still want to make sure that you're really in that need to get that forbearance. Something that you have to keep in mind is that in order for you to be able to qualify for this relief, is that consumers need to indicate that the hardship is due to COVID-19. because that's what the law is about. It's because for people who have been affected due to COVID-19. You can ask them about what are the forbearance options, and make sure that you get this in writing. Don't just call and get a verbal, because in case you need to go back and improve anything, at least you'll have it in writing. And if this does become long-term, maybe after 12 months, you still are not able to make this payment, consider asking for a loan modification. I think most servicers are going to try to work something out if they see that it's something that definitely you're not able to do right now. If you can't make your payment, and if it's been that long, more likely it'll be because you're going to probably need a loan modification. So how do you know if your loan is federally backed? Well, the first thing is to ask your servicer. They should be able to provide you with that information. You can check your mortgage documents, especially if it's like an FHA or a VA, one of those. It's going to say on your documents, if you're paying mortgage insurance, that means you have an FHA. Or you can check directly with the federal agency. Indicating here on the slides some information, some websites, and some phone numbers where you can call and ask for information to inquire if your loan is federally backed. So that's the information I have for you today. I hope this has been helpful for you. If you have any questions, feel free to contact me. I'm here to help and answer any questions, okay? Thank you.